So, why did Alibaba drop 30% in 2 months' time? So in this video, I'll seek to explain some of the common understanding or consensus amongst the market participants, and maybe also share some of my thoughts around Alibaba, how they have been operating, their earnings, and some of these data points that we talked about. So of course, don't forget to always smash that cute little like button on your way out. So just by looking at this graph, it actually started, it dated or started from 2022. You can see that Alibaba's price pattern is just bouncing up and down in this very interesting trend. So the lowest it went was around 58, and I think it has kind of hit the top end of the spectrum at around $120 to $130 range. So for all the traders out there that managed to time the ups and downs, congratulations. If you actually use leverage, I think you would probably have earned a crap ton of money. Think about it. If you were to buy here, sell here, buy here, sell here, buy here, sell here, buy here, sell here, and then in this current movement, I don't really know whether it's going up or down, but for those of you who did catch it, congratulations. And of course, if you are able to repeat it for a few more times with leverage, I'm sure you'll be the richest person on earth in no time. So yes, I should stop sounding salty and go into the video proper. So looking at the history of how China stocks has traded over the last decade or so, looking at the Hang Seng Index, which is primarily in the Hong Kong exchange, you can see that they have experienced some sort of a lost decade. It's trading around 19 to 20,000 points, and the last time it actually visited this area was around 2007. So that's close to 15 years ago. Yeah, it's around 15, 16 years ago. Moving on to CSI 300, this is basically the 300 largest cap China stocks. It's trading around 4,000 points. And if you do really push the discussion, in 2009, it was trading around 3,600 points. And in that period, 2009 until 2023, that's also more than a decade or so, it's up around 9.9%. So you can say that, hey, many of these China indexes, they haven't been performing very well. I'm just using these two indexes as an example, but just go ahead and Google whether is it some Dragon Index, MSCI Index. Most of them have similar consensus and similar performances. So which is why, based on my own understanding of the Chinese market, so you either stock pick or you buy a thematic ETF. So by thematic, maybe you want to bet on a particular sector, whether is it the semicon sector, the green energy sector, or the tech sector. If not, because of the nature and the maturity of many of these so-called large cap indexes, the mechanisms are not really very well thought out yet, and the entire idea of stock market maturity is not there yet. That said, I would also like to add on that I'm not saying that buying into an index is bad, specifically for China, but for those of you who really just want to index, I will presume that many of you should still allocate most of your capital to the US counterpart or even to a world ETF. Now, I think to circle back to the main topic of the discussion today, why did Alibaba actually collapse by 30% in the last 2 months? I think there is 3 underlying factors that was essentially challenged in the last 2 months. So it's essentially a change in narrative. So what are the 3 main assumptions? Firstly, it's the China reopening story. Secondly, it's the support of big tech. And thirdly, it's the great economic recovery. So firstly, let's talk about the Chinese pandemic policy pivot. So many of the discussion arise late last year, around the December period, where China essentially took a 180-degree turn, saying that they are no longer instituting many of these lockdown policies. So you can see that many news media started running the headlines of, there might be a potential pent-up demand, there's revenge spending. Many bulge bracket banks also released many of their reports, saying that, maybe their top pick is betting on the Chinese consumption recovery. And you can see that I just quickly did a Google search. Alibaba is top pick. Analysts boost estimates, expecting growth recovery and easing logistics from fiscal 2024. And this article was published in January of 11, which is the start of this entire cycle of how people are expecting this huge China recovery. However, the political tensions around China and US relationship has also been expediting. And by expediting, I think expediting is actually an understatement. The temperature essentially just went through the roof. So I think for many investors on the sidelines trying to bet on this China economic recovery, many of the funds have started to flow to find alternative ways to try to bet on this recovery. And one of such example, because I was just conversing with another friend, is betting on LVMH. we do know of a great deal of interest again around those LV products because of this China reopening. People can start traveling to Europe and they can freely enter and leave the country again. So that's one of the ways, or one of the alternative ways, where people are looking towards betting on this China great recovery and China expenditure and China consumption and what have you not. And also, according to a fund flow data provider, 8.2 billion have actually flowed into China dedicated funds in this year alone. So from this entire discussion, you really understand that many people really want to jump on this bandwagon onto betting on this huge China recovery. But this air quotes huge recovery is purely theoretical for now, because many of the data points that actually come out from China actually suggest otherwise. And one of the main important metric people follow is actually CPI data, so Consumer Price Index. People follow this metric is to really understand and to feel a pulse or feel the temperature of the demand of the market. So assuming that the demand of the Chinese consumers is going to see a huge uptake, we would expect inflation to also rise up exponentially as well. But you can see in February, so you can see 2月, this is 2, just means Feb, the second month of the year. There's actually a downtick in terms of the CPI data. So this is the CPI graph. So then here comes the question. Are we really expecting a growth recovery, or is this just based on theoretical discussions and how we are expecting the economy is going to perform, but they're essentially not performing? So on the first idea that after post-pandemic recovery, the discussion is falling flat. But I'd just like to say that, hey, firstly, let's look at China's savings rate. It's still hovering at around 45%, and that's one of the highest savings rate out in the world. And China is still sitting on a record 2.6 trillion in savings rate. I think this is one of the biggest safe deposit rates in the entire world. So it's not that the Chinese consumers don't have the money to spend, they're essentially just not spending the money. So the good thing is, there is probably still a lot of room for the government to maneuver around and to stimulate the economy. But they have been rather skeptical and they have been rather cautious because of probably what the rest of the world is currently experiencing after they opened the floodgates of stimulus. So that's maybe why they are slightly concerned. So on the second point about this idea of supporting big tech companies. So we know that supporting big tech, or at least the big tech crackdown, have been the main headline and main episode over the last 2 years. The crackdown on gaming, the crackdown on e-commerce, the crackdown on monopolies, etc., etc. And Alibaba has been the poster child of this entire crackdown. But that said, there are some instances, at least over the last 2 or 3 months, stating that, hey, there might be signs of support for many of the big tech after the 2 years of regulatory pressures. And this is one of such instances where Zhejiang's provincial party secretary actually visited Alibaba. And by this visit, they are essentially just pledging their support and commitment for the revitalization of the tech industry. And by visiting Alibaba, which is the poster child, it actually draws some sort of confidence to the investing community, because the government is essentially saying, hey, we are probably done with whatever we want to do, so you guys can probably start looking towards investing back into the tech sector again. And more importantly, even Chairman Xi himself has also stepped up the optimism and to essentially encourage people to relook into the tech industry. Chairman Xi himself have also asked that the country's big tech firm play a full role in leading economic growth. What does it mean by playing a full role in leading economic growth? I'll leave it up to you to decipher the message. But essentially, it's an integral part of the Chinese economy. But that said, despite all this support that are shown to big tech companies, there are still multiple instances that probably left a bad taste in investors' mouth. And it's probably lingering at the back of their mind, which is why people hasn't been as supportive and hasn't been as optimistic in reallocating capital back into the tech sector again. So I think I do have a few points to add on this specific portion about leaving a bad taste. So firstly, I think the entire idea of a tech crackdown episode is probably still in limbo. It's true that we are probably nearing to the end, but there are probably still many concerns around how they can just institute many draconian measures and how the government is above all. So which is why people might be skeptical in reallocating capital back there. Secondly, it's the idea of a golden share. So the Chinese government actually also took on golden shares in Alibaba and Tencent, in some of their media arms, not the entire enterprise, but their media arms, in hopes of trying to have some control and some say in terms of what they can publish and what they can censor, etc., etc. So last but not least, I think even in the top political meetings, China actually favored chips and AI executives over their internet tycoons. So a number of prominent Chinese internet executives have been left out of the country's top political meeting in Beijing this week, giving way to experts in AI and semiconductor as Chinese leader Xi Jinping priorities shift and rising technology competition with the US. So this actually happened in the start of March. And this 2 sessions, it's one of the most important meetings in China because it kind of set the agenda and set the direction of the entire economy and the entire country. So from this perspective, it does seem like many of these Chinese internet players kind of fell out of favor. But I'd just like to provide my opinion on this. It might just means a reframing and a reprioritization. It doesn't really mean that the Chinese internet sector has no role to play in the Chinese economy, but it might just mean that chips and AI might be a much more important priority, which is why they're included in the discussion itself. But I think the ultimate reasoning is this. China, as an economy and as a system, is not very transparent. And its entire political machinery, it's basically a huge black box. So many analysts on the sidelines, whether it's political analysts or business analysts, they're just making predictions after predictions and speculations. So they actually base their predictions on many what-ifs and what-nots. And they even predict it down to the T, to the language used, the words that are used, and how many times Chairman Xi actually sips from its cup. Okay, maybe not to that extent, but I'm just joking on the drinking part. But anyway, we can only all speculate, and nobody really knows the real reasoning on why they include and why did they not include. And because of this uncertainty, the mainstream media's narrative actually tend to turn to a certain direction, however they like for it to be. So you see valuations actually follow alongside. So when you see people talking about like golden shares, you see people talking about, the Chinese internet tycoons are falling out of favor. Which also explains why the stock price is going up and down. They essentially follow the media narrative. So for those of you who are long-term investors, I think that you should kind of just discern what is noise and what is actual substance, and you make your evaluation on the sidelines. But I think the last point about the Chinese economic recovery, I'd just like to say that they did set a GDP target of around 5%. For those of you who don't know, around is not really a good use of speech or figure of speech because it kind of give off the impression that the Chinese government is not very confident of hitting the 5%. But that said, China did cut their bank reserve ratio again for the first time in 2023 to essentially aid recovery. So the People's Bank of China said that it will cut the reserve requirement ratio for all banks except those that have implemented a 5% reserve ratio by 25 basis points from March of 27. So yes, you can call it QE, you can call it some sort of loosening of the monetary and fiscal policy, but yes, China is in the cycle of trying to loosen up and try to instill consumer confidence again. So I guess you have to tie everything together. Alibaba share price is essentially a vote of confidence from external investors on the Chinese economy. So a huge drawdown in a very short period of time literally just means that the narrative probably changed. Everybody was so upbeat and so optimistic about Alibaba and about the Chinese economy at the end of January of 2023. So everybody was saying that, this huge recovery is going to lead investors' confidence and it's going to lead the consumption patterns again. But then 2 months later, we are back down again, down 30%. So unless you're a trader, you have to pay very close attention to the narrative. For long-time investors, just track the business performance and underlying business metrics. Since you already held on for so long, holding on for another 3 to 4 quarters, it's probably not too long to see how things are going to play out and whether it's going to play out sustainably or not. So for investors that want results now, I suggest that you look elsewhere. But fundamentally, I still believe in the Chinese story and the recovery for the long term. With that, I'll see you in the next video. But more importantly, I will see you on the moon. Goodbye!